The following is a conversation with Martin Belezki. Martin Belezki is an independent quant trader based in Germany, and over the last couple of years he has built a great reputation in the trading scene, mainly because of his algorithms and because of his success with prop firms. So in this interview we talked about machine learning, about trading algorithms, and on how to become a successful trader and much more. So I hope you guys enjoy the interview. Hello Martin, pleasure to have you on the show today. How are you?
Hello Jonas, thank you for having me. I'm doing great, thanks. How about you?
Yeah, I'm doing great as well. So I was already looking forward to this interview the whole week. For the people that don't know you, you are known in the trading scene for your algorithms and for your strategy and your success with prop firms. So for the people that don't know you yet, how would you describe yourself and how would you describe your work?
Yeah, I would describe myself as a quant trader, as an algorithmic trader. That means I'm not your typical manual retail trader. I'm doing things differently than most of the other traders. I'm developing algorithms which then can do the work for me, which can automatically trade for me. That's basically what I'm doing.
Okay, very nice. And how did you get into trading and why? You're in the trading space for a few years already, right? So how did all of that start?
Yeah, it's been a few years already. I started back in 2020, I guess, when this whole COVID thing started. I was looking into some long-term investments. I invested in Bitcoin, and so I wasn't really interested in day trading, but somehow I went down the rabbit hole, and my investments turned into higher frequency trades, I guess, and that's how I got into trading.
And you just mentioned algorithmic trading, right? Like, so for the people that don't know anything about algorithmic trading, like how would you describe a subcategory of trading?
Yeah, algorithmic trading is basically you're combining two different skills: trading skills and coding skills. First, you need some strategies, some trading strategies. This is where your trading skills come to help, and then you need coding skills in order to automate them. And then you can run them automatically. You can live your life, do other different things, and your algorithms do the heavy lifting for you. They do the work for you in the background, and they execute your strategies. Yeah, that's how I would describe it.
Okay, so if a person hears that, like for example, a person that is not into trading and who has no touch points with trading yet, maybe that person would think, oh, that sounds so easy. Why can everyone do that? And why can everyone make money with that without doing any work, right? Because that's how it sounds like. So what would you say to these kind of thoughts? Like if some person would come to you and say, hey, I want to do the same. I don't want to work my job anymore. I just want to make money on the internet and I just want to make money with an algorithm. Like, what would you respond to that person? Is it really that easy?
No, it's not easy at all. Algorithmic trading or trading in general is a whole career. It's not something you can do on the side, in my opinion. It's a whole career, and you have to put a lot of hours, a lot of blood and sweat and tears into this thing, and it will take you many years. You have to learn a lot of skills. You have to combine these skills, And yeah, it's not really, it's not easy at all, to be honest with you. I'm all the time, I'm working all the time, basically. Yeah, my algorithms do the work for me, but to be honest, I'm constantly refining them, optimizing them, developing new algorithms, and this takes so much time. It happens very often that I don't get a lot of sleep, let's say like that.
Mm-hmm. And this is because the process of programming an algorithm is so time intensive, or what is the reason for it? Is it more like is this developing the strategy more difficult, or the algorithm?
The hard part is basically to develop the strategy. You have to differentiate between research and development. Under research falls everything that, yeah, basically research means that you are developing the strategy, you're coming up with ideas, with rules, you're testing different rules, you're back testing, you have to test what works, what doesn't work, you have to cut out what doesn't work, you have to put in, to integrate what does work, and this takes a lot of time. And then the development part is actually not that time intensive, it's more the research part. If you have a strategy, then the development is basically straightforward.
Okay, I understand. So recently, I talked with someone I met here in Bangkok about algorithmic trading, and that person said, "Yeah, like I can put like I can ask Claude about everything, and I can let Claude develop my strategy, and I can just tell Claude what I want, and like that I want like basically the perfect algorithm, and then Claude can also program it for me." And then he said something along the lines of, "Yeah, how hard can it be, right?" So, what would you respond to that? Is it really that easy nowadays to develop algorithms with the help of AI or with large language models?
Yeah, large language models are a blessing, to be honest. I'm working a lot with them. But the problem is they are not really trained with the data that you need them to be trained with. Large language models are trained with, first of all, they're not really trained with the data of the instruments, of the assets you're trading with. So if you ask them for some ideas of strategies, they will probably give you some very basic strategies because they are not really trained with the data, and they are trained with retail knowledge. Yeah, they're trained with a lot of books or a lot of forum posts on the internet of retail traders. They are not really trained with institutional knowledge. That's the problem. So you will probably get very basic strategies out of them if you ask them for strategies. But when it comes to coding, yeah, they can help you a bit with coding. But it's also a bit problematic because you need to have full control over the thing you are developing. You have, when you're developing an algorithm, there are a lot of details you have to think about. And when you're giving all that work to a large language model like Claude or ChatGPT, you don't have the control of, you can't really control every detail. You have to trust these models basically that they are doing everything how it should be done, but it's better to do it yourself, to do most things yourself, so you have more control and you can really achieve what you want to achieve with the algorithm.
Yeah, that makes a lot of sense. So basically, like from what I understand, your edge is really your experience in with trading over the last few years, right? And that's not easily like someone cannot easily copy that, right? Even if someone says, "Oh yeah, I can just use ChatGPT or I can use Claude to develop an algorithm," it doesn't really work unless the person has a similar amount of knowledge, right? And because you have that knowledge over the last few years, um, you you basically always have an advantage over someone who tries to develop the algorithm with a large language model. Is that correct?
Yeah, exactly. That's how I would describe it. Um, Everyone can try it out. You can try to ask ChatGPT or Claude or Grok or Gemini about some strategies, and you can then ask them to code these strategies. But I can tell you that most of the time it will not really work out. You have to know what you're doing. You need your own experience. You have to build your own intuition. You have to look at charts a lot and think about strategies yourself.
Mhm. Yeah, makes definitely makes sense. And I know that you are also doing a lot of your work with machine learning. So, do you want to talk a little bit about that? Like, why machine learning and why does it give you an advantage?
Yeah, machine learning is sorry. Machine learning is a very interesting topic. It's basically a subtopic of AI, of artificial intelligence, and in the context of trading, of algorithmic trading, you can use machine learning to develop sophisticated machine learning models, which you can then use as the brain of your algorithm. And these models basically can detect hidden patterns in the market, in the data, that you can't see with the human eye. And this can give you an extreme edge.
Mhm. So, can you give an example of a pattern that a normal human can detect, but the machine learning algorithm can?
Yeah, it's really not that easy to explain it. For example, the machine learning models can detect some sort of correlation between some indicators or price and time that you would never think about as a human. For example, it can detect that it makes sense to buy every Tuesday at exactly 10 minutes after the market opens, and this works only on Tuesdays. And some very weird patterns. It's really hard to describe it, but these are patterns that are really hidden, and you wouldn't as a human you would never think about that.
Mhm. Okay, yeah, it's very, very interesting. So, what do you think, like in the trading scene, how many people are there like you that develop algorithms and also work with machine learning and what kind of percentage of traders would you say is really successful with that? Because if I look at the trading scene, I see many traders they are not successful. So I often see these YouTube videos. There's basically a new trading YouTuber like every month that makes a video about how hard trading is and that they're not profitable, right? So yeah.
Yeah, right. I think in the retail space, almost no one does the things that I'm currently doing. There are some people in the retail space that are trying out algorithmic trading for themselves, but I guess that no one of them is using machine learning the way I'm using it. It's more common in the institutional space. Institutionals, big players, they are all using algorithms and machine learning and AI. There's in the institutional space, there's no one that is manually clicking buy and sell.
But then another question comes to my mind, like, who do you learn from? Like, who were your mentors? Like, because obviously you learn a lot by yourself, right? Like, a lot of your knowledge comes from your experience, all the ups and downs that you had. But I'm sure you also had some sort of mentors in that path, right?
Yeah, my path is really different from it's not the classical career path. Most people who work at these institutions who got into quant finance did went to a college, a university first, study mathematics or physics. I'm a bit different. I learned everything myself for the last few years. I started with one of my biggest mentors was ICT. When I started to trade manually, ICT does not trade algorithmically. He does trade manually, but he has really helped me to build the intuition, the experience that is required in order to develop strategies. And then I used some strategies from ICT and I started to learn coding myself. I hadn't really have a mentor when it comes to coding or programming or algorithmic trading. I learned everything myself. Everything is on the internet. You can really learn any skill you want. Everything is on the internet. There are a lot of books. I read a lot of books about algorithmic trading, about machine learning. I went through a lot of forum posts. I asked AI about learning. How do you say it? I asked AI how you can learn these topics, and yeah, I spent the last few years basically learning and trying it out, and sometimes it works, sometimes it doesn't work, but then I can look at what doesn't work, then I can improve. It's a lot of trial and error, but yeah, I learned everything myself basically.
Mm-hmm, mm-hmm. So you mentioned before that your path is a little bit atypical, right? Because most of the traders that work at these big institutions, they went to university, they studied physics or math, and then they got into these institutions. And let's say someone from an institution watches this video and they would make you an offer. Like, would you be interested to work for one of these big trading firms if you get the chance?
Yeah, that's a really, really good question. I thought about that a lot actually. And I actually had some people ask me if I would want to work for them. But let's say it like that. I like my freedom. I like to be independent and work on the things that I really want to work on and not have some other boss tell me what to work on. Let's say it like that. But maybe it's a good idea to, for 1 or 2 years, to work for an institution to learn. Maybe I can also learn something from them, and it would be great to gain experience, but it's not something for me for the long term. I want to stay independent and have my freedom.
Okay. But who knows? Maybe you get an offer after this interview.
Who knows?
Yeah. What would you say, what role does obsession and discipline play for you? And especially like for you and in the trading space in general, if someone wants to be successful in trading?
Yeah, that's one of my biggest advantages, basically, that I am obsessed about what I'm doing. I'm obsessed with it. And I tell it a lot that obsession is more important than discipline. You don't really need discipline. You don't really have to be disciplined if you're obsessed with it, because then you're thinking 24/7 about the thing. Trading in my case, I'm thinking 24/7 about trading all the time. I work all the time basically, and it does not feel like work to me. It's my passion. So yeah, if you really want to be great at something, you have to be obsessed with it. And then you don't really need the discipline because it comes automatically. Let's say it like that.
Mm-hmm. And what would you say? Why are most traders not obsessed with trading? Because if everyone would be obsessed, like most people in the trading space would be successful, right? Like, what would you say? Where does that obsession come from?
Yeah, I don't know. Maybe I'm a bit neurodivergent. I'm a bit different. If I'm interested in something, I want to learn everything about it. Most people aren't like that. Most people that start trading are in it for the quick bucks. They want to get rich quick. They think it's a get rich quick scheme. They just want to make some money quick. They don't want to dive deep into these topics. They don't want to learn any technical skills. And that's the problem. They don't want to spend so much time into this and learn some really good technical skills.
Mm-hmm. Yeah, you mentioned that you are maybe a little bit neurodivergent, right? So I'm not I'm neurodivergent myself, and most of my friends are, and most of my friends are entrepreneurs. So I think this is what a lot of entrepreneurs have in common, successful entrepreneurs, right? They're a little bit neurodivergent. They have ADD or ADHD or some form of that. It's funny, today I watched some videos about ADHD, and it basically, like, people that know a lot about that, they basically say, yeah, like, people with ADD or ADHD, they become obsessed about one topic and they know everything about it, and this is why they become successful.
Yeah, exactly. You have to be a bit crazy, a bit insane in order to succeed in this world. For example, maybe you heard about that, the CEO of Palantir, he talks a lot about this. He basically only hires people that are a bit neurodivergent, that are a bit out of the norm, because they think differently than normal people. They are more creative. They can really be obsessed about the topics they're working on, and get a lot of interesting work done.
Yeah, true. Like, yeah, the most successful people in the world are neurodivergent, right? Like Elon Musk, for example, or Alex Karp, I think is.
Yeah, that's his name.
Yeah. And yeah, that's really interesting. And they don't teach about that in school.
No.
Interesting as well. So another topic that I wanted to touch on is prop trading. So many people, when they start trading, maybe they don't have much capital, and then they want to sign up with a prop trading firm, because with these prop trading firms, they get capital to trade with. And how do you view the prop trading space? Because in the past, there were a lot of scams a lot of scammy firms that went under, and but there are also some good firms. Like, how do you see the whole prop trading space?
Yeah, I think prop trading in general is a really great concept. It's a great opportunity for a lot of traders. I'm myself funded with 5 different prop firms right now. I'm at $500,000 asset under management when it comes to prop firms. And yeah, but you have to be very careful. You have to know that it's also a shady business, and there are a lot of black sheeps in this business. You have to. It's so funny when you look at Twitter, at X. There are a lot of people, a lot of bad stories, a lot of really bad stories about some prop firms. A lot of traders have really bad experiences with these prop firms. They don't get their payouts, and yeah, you have to use it maybe as a way to get more capital, but your long-term goal should be to trade with your own capital, in my opinion. You can use some prop firms to accelerate your growth, but you don't be dependent on that, on them. Don't be dependent on them, yes.
So what would you say, like, what are some red flags when it comes to prop firms? Like, how to spot a good prop firm and a bad prop firm?
Yeah, the red flags, most of the time, they are really obvious, to be honest. If the rules, for example, are too good to be true, or the prices are too good to be true, the price of the challenge, the challenge fee, if some things are really too good to be true, it's a red flag. Also, stay with the firms that existed for a few years already. Don't go to the newer firms because most of the time it's the new firms which go under. So stay with the big names, with the big firms that already existed for a lot of years. Yeah, there are also some other really funny red flags. For example, like 2 years ago, there was a prop firm where the CEO was 14 or 15 years old or something. And that was a major red flag. And yes, the firm went down. It only lasted for a few weeks. Thus, just look for the obvious things. Also look for reviews on X. Yeah.
And for example, would you say, like, for example, if someone trades with prop firms and maybe they're like funded with 3 or 4 different prop firms, like, would you say it's like possible or a worthwhile goal even to live off prop firms? Because you mentioned before the goal should be to build your own capital, right? To trade with your own capital. But maybe there are some people out there, they want to live off prop firms. Like, what would you say? How possible is that for the average trader?
It's possible, yes, but not really for the average trader, because most people are gambling with these prop firms. They start a challenge and they're basically gambling. They are risking way too much, and then they blow their account. And also when the fund, the statistics are really bad. When you look at the statistics, only like 20% reach phase 2 on a 2-phase challenge, and half of them, so not even half of them, like 5 to 10% overall, manage to get funded, and only a small percentage of them, only like a third of all people that get funded, manage to get to the first payout. So you have to know that the statistics, the numbers are against you, but it's, in my opinion, yes, if you do things differently than others, if you treat it like a real business and not like the casino, then you have good chances, yeah.
Mm-hmm. And let's say someone watches this interview and he's funded with a few prop firms and he wants to get out of prop trading again because he has enough of it, and he wants to be self-funded, he wants to trade with his own money. and let's say that person wants to make 2,000 euros a month. Like, what would you say? How much capital does someone need, like to be self-funded and to make 2,000 to 3,000 euro a month? Like, at which point is it possible to live off your self-funded capital, let's say?
I would say at least like 50k US dollar, but that's preferably more. Like 6 figures would be really great if you manage to get like 6 figures, 100k out of these prop firms, and then you can live really good by self-funding yourself with these 100k. Yeah, under 50k I would not recommend to do self-funded trading, basically, because it does not really make sense. It's way harder when you don't have that much money. You have to make way more percentages in order to live off of it.
Yeah, that also needs to be sustainable, right? Like, let's say you have 50k and you try to make 6% per month, then there's a good chance that you will not hold onto this money for a long time, right?
Yeah.
So, what would you say? What's a good sustainable percentage per month for a trader? Is it like between 1% and 3%, or like is it more around 1%, or what do you say?
Yeah, I always say that you should not aim that high when it comes to trading, because then you will probably blow the account if you're risking too much and aiming too high. I always say aim for 1 or 2, maybe 3%. That's the maximum per month. And yeah, when you're not aiming that high, when you're aiming for 1 or 2% per month, it's way more sustainable. It's way more, you can be way more consistent with that and can achieve it every month. Otherwise, you would be maybe, yeah, of course, it's possible to get like 10% or 20% per month, but it's not really sustainable. It will go well for a few months, but then you will blow the account.
Yeah. And there are always outlier months, right? Like, for example, this month, April 2026, like Nasdaq all-time high, S&P 100 all-time high. This is a really good month, but what I also think is important to not think, oh, this will go on for the next few months as well, right? Because this is what I like about your trading style. You always say, be prepared for bad times, right? So and this is good advice. So to hold on to your money and to not be too euphoric.
Yeah, exactly. And also, in order to be profitable at the end of the year, you don't need every month to be profitable. You can be profitable at the end of the year when only 6 months out of the year were profitable and the other 6 months were bad. And yeah, like you said, every month is different. Don't expect the market to give you always what you want. Be prepared for bad times. Don't risk much. Have strict risk management rules in place. This is very important.
Yeah. So what would you say? Like, for example, there are traders. Sometimes they risk 2 to 3% per trade, right? And then there are traders that are quite conservative. They risk maybe 0.5 to 1% per trade. So what would you say? What is like the best way to go about that? Like, would you say, like, if you stay under 1% per trade, that's good?
Yeah, it really depends on your strategy. If you're a swing trader, for example, you can risk a bit more. You can risk 1 or 2% because you're not trading that much. Maybe if you're a swing trader, you have like 5 or 10 trades per month, and then you can risk more. If you're a high frequency day trader, if you're a scalper, and you're doing a lot of trades per month, like 100, 200, 500 trades per month, multiple trades per day, then you really don't want to risk that much, and you want to stay at 0.2, 0.3%. It really depends on your trading style. But I always think that you should risk, you should calculate your risk that at 10% or 10, let's say 10, you have a stop out series of 10 stop outs in a series. And this should not blow your account, let's say it like that.
Okay, so basically, let's assume someone has 10 stop losses in a row, but if they're at 0.5% per trade, then they would be fine. They would not blow their account, basically, right?
Yeah, because
if they're at 2 or 3% risk, then they would blow their account with 3 or 4 stop losses.
Yeah, I think these drawdown rules of the prop firms, they are really great, actually, because maximum drawdown is, for example, with the CFD prop firms, maximum drawdown is often at 10%, and you don't want to risk that much that 10 stop outs in a row will put you in a position where you are violating this rule, this drawdown rule.
Okay, yeah. Yeah, so I also think prop firms are actually a good way for new traders to learn, right? So because they, like, by trading with a prop firm, you have all these rules that you don't have when you trade with your own capital, but if you learn all these rules and if you apply themselves in your trading, and then later on, if you have 6 figures and you want to live off your capital, you learn a lot, and this will help you to keep your capital later on.
Yeah, that's a really good point. Prop firms really have helped me to become a better trader and risk manager. Yes, the rules are hard, they are also a bit unfair, but in the long run, they will help you to become a better trader and risk manager, of course.
Mm-hmm. Yeah. So another question. So you are in the trading space for 5 years now, right? Or 6 years?
Yeah, 6 years.
So what are your personal goals with trading over the next 5 to 10 years, if you want to speak about that?
Yeah, first of all, I want to scale everything I'm doing right now. Right now at the moment I have like 10 to 20 different algorithms, some of them with machine learning, some of them without machine learning, and I want to scale that to 50 to 100 to be really diversified, to have it's a really good idea to have a lot of algorithms and each of them is doing something differently, is executing another strategy. Then you're really diversified, and it's basically mathematically impossible to lose that way because some of them will always make money. That's a big goal. But yeah, maybe in the long run, I also want to build an institution myself, maybe a hedge fund or something like that. But this is really, it's way too early now to talk about this, but it would be really great to have a hedge fund myself in like 5 to 10 years or so.
Mm-hmm. Mm-hmm. Great. Yeah, that's a great goal. But for now, you want to scale. You want to still work on your algorithms so that you basically have an algorithm for every situation in the market, right?
Right.
Nice. And what would you say, like, for for example, if a new trader comes to you and says, Martin, I want to be like you, I want to do the same, and I also want to maybe achieve all these kind of things, what advice would you give to a new trader, and also what kind of resources would you recommend to that person, like books or YouTube videos or whatever?
Yeah, I think the first thing that a new trader should learn is how to think in probabilities. Get your psychology right, think in probabilities. A really great book that I always recommend is Trading in the Zone by Mark Douglas. This book has really helped me. It was my first book back in the day, and it has really helped me to think like a successful trader. And then, yeah, I can always recommend ICT. ICT is a really great mentor. You don't have to agree with everything he says, but he has a lot of intuition. He's trading since the 90s. He has 35 years of experience, and you want to learn from people like that have a lot of experience, like at least 10 years of experience, because they can teach you how to build that intuition that is required in order to win, how to look at charts and have an intuition for what kind of strategies can work and what kind of strategies cannot work. And then dive deep into technical skills. Learn coding, learn machine learning. Yes, it takes some time, but if you really want to be successful in the long run, if you want to live off of it, then you have to develop some technical skills.
Mm-hmm. Yeah, really, really great advice. I would agree with that. And also another thing that comes to my mind, a lot of people nowadays, they are worried that their jobs will become obsolete in the next 5 years through AI. And I also talked with a friend about that recently, and he comes from a wealthy family and he's very successful himself. And he told me that basically in the next 2 years, the middle class will become smaller and smaller because of AI, and because, for example, because of AI, the production will be very cheap to produce products, right? So a lot of people will lose their job. And would you say that trading is a career that is AI proof? Like, would you describe trading as a career as AI proof? Like, for example, could someone, like, if they really log in for the next 5 years and just focus on trading, could they save themselves from that AI apocalypse, so to say?
Yeah, first of all, I would not really recommend most people to start with trading. I know a lot of people, because if you're starting trading because you fear that you're losing your job, that you will lose your job because of AI in the next 5 years or so, then you're starting trading out of a bad position, out of a position of fear and hope, and these are too much emotions. When you want to be a trader, you don't want to have that much emotions involved. You don't really want to be, it's not really a great place to start trading out of fear. I think there are a lot of, for most people, there are a lot of better ways to survive the AI apocalypse.
Okay. Interesting.
But yeah, also I can. You asked me if trading is AI proof. If you're trading for yourself, then yes, it's basically AI proof. If you're trading for an institution, for a big firm, then probably you will be replaced by AI in the next 5 years or so.
Okay, but basically someone who works for an institution, right? Like if they lose their job or if they quit their job, they could use their knowledge as well to build an algorithm, right?
Yes, right.
So, yeah, yeah. And another thing that really interests me, like, since you started trading, you also learned, like, it's inevitable to learn about money, right? Like, in general, when you learn about trading. And what would you say, like, compared to the average person, like someone who has no touch points with trading, what did you learn about money in general over the last 5 years while you built your trading career? Because for me, I trade myself, right? I trade with your algorithms that you made for me. And for me, it's so interesting. Like, for example, if I have a take profit, let's say $1,000 that I make on a day, it's so interesting because I can go to a restaurant or I can go to, I don't know, to the Apple store and buy like services or a product with money that came from the market through an algorithm, right? And that other people need to work a lot of hours for these $1,000 that someone can make with an algorithm in a day. And that was always so fascinating to me, right? So, for example, this is something that always blows my mind. And yeah, what is something that you learned about money in general, or something that you just find so fascinating since you got into trading?
Great question. First of all, don't be reckless with your money because yes, you will have a lot of good days where you can make like $1,000 per day, but there will also be a lot of bad days and bad weeks
Yeah,
and bad months.
yeah,
So you have to learn as a trader to don't be euphoric, don't be reckless with your money and spend it right away. And you have to be prepared for the bad times. That's
yeah, yeah. But what I wanted to touch on with that example is like, I mean, there's like, for example, if if someone earns 20 euros an hour, right? He needs to work 50 hours to earn €1,000, right? But if you have a system like an algorithm, and let's say you trade with a prop firm and you make like a profit of 1,000 or 1,500, right? You basically made in a day what another person needs to spend 50 hours on, right? And that's, for me, that was always so interesting because if you think a little bit further, right, there are people, they have 10 million, 50 million, 100 million euros in net worth, and maybe they trade with only a fraction of that capital, but still, like on a day, they can make a lot more than the average person can make maybe in a month, in a year, and they with one trade they can buy a lot of other people's time, right? And that was always so fascinating to me.
yeah, right. That's also what fascinated me in the first place about trading. It's limitless. You can, you don't really have a limit when it comes to how much you can make with it, and you're not exchanging really your time for the money. So it's really fascinating, yes. And I think that most people working a 9 to 5, that are exchanging their time for money, are getting scammed.
Mm. Yeah, I mean that's a whole other rabbit hole, right? Because, for example, I really respect people that have 9 to 5, right? Like, for example, if they are, I don't know, if they work in an Apple store, or if they work in a restaurant, or if they are a nurse, because we need these people to keep society together, right? To keep society intact. But of course, like for the let's say a nurse, right? For example, for the time and effort the nurse puts in her work, and the pay is by far not enough, right? And also for example, we are both from Germany, right? The German government, they take a lot in taxes as well. And then on the other hand, there are people, they make money out of money. So, and especially the big institutions. I worked for big institutions before as well, right? They basically have unlimited money. And if you work with these institutions, you realize money is not real, right? It's really not real. So, yeah.
Yeah, trading also can how do you say it? Desensitize you to money. At some point, you don't really think about it as money, as real money, but as a game, basically.
Yeah, yeah. And for example, what is the other thing that you learned about money, like in the time that you are trading? Maybe some other insight, like the one that we just talked about. Is there something?
Phew. I think you mentioned already a really great point that that most people that are exchanging their time for money are getting scammed, basically. But trading is also not for everyone. Most of these people will not succeed in trading. Trading is really hard, actually. And there are a lot of people that committed suicide because of trading, that killed themselves because they lost so much money with trading. So I really wouldn't recommend most people to start trading. For most people, it's really the best idea to stay in their 9 to 5 because it's secure and they get paid regularly on a regular basis. Yeah.
But what are some signs that someone could be potentially a successful trader? What are some, for example, some characteristics of a successful trader? Because maybe there are some people out there, they still work their normal job, but maybe they are interested in stocks, but maybe they don't know much about it yet, but maybe they have something inside of them that could make them a good trader, but they don't know it yet.
That's a really interesting question. First of all, they should be able to be very disciplined because when you're trading manually, and most people, when they start trading, they're trading manually, you have to adhere to all these strict rules, rules about your trading strategy, about the risk management, and you have to need this kind of self-discipline. You have to be very disciplined. And then another skill is the ability is critical thinking, the ability to think critically about things, about situations, about your own strategies, about the market, to spot things in the market, in the charts that other people are missing. You have to think differently than other people. I would say it like that. And you need to believe in yourself. You need to have a strong self-belief because when you start trading, either manually or algorithmically, the first 1 or 2 years you will probably not make any money at all. You will probably lose money. So you need to believe in yourself that you can achieve this goal.
Mm. Yeah, that's good advice, I think. And yeah, so do you have any last words? Maybe to someone who watches this interview.
Yeah, if you really want.
And how can people find you?
Yeah, people can find me on basically every social media platform. It's always my full name, Martin Belezki, at Martin Belezki. It's the same on Instagram, X, YouTube, TikTok. And I will start to post a lot about trading in the future. And yeah, one last advice I can give people, if you really want to start with trading, and most people really shouldn't start with trading, to be honest, but if you think that you're one of them, that you can be successful at trading, then I can tell you about a concept I've developed myself. It's the 3 pillars of trading. First pillar is the technical edge. You need a technical edge. That's basically your strategy. You need to look at charts a lot, spend a lot of time with the charts, and come up with a technical strategy. For example, you see that price always returns to a specific level, or always starts to trend a lot when it breaks a specific level, or something happens at a specific time. That's your technical edge, and you have to spend a lot of time in the charts, in the markets, to develop your technical edge. The second pillar is your risk management edge. You need to come up with some rules on how you want to manage your risk, your money. For example, the reward-risk ratio. If your reward-to-risk ratio is like 2-to-1 or 3-to-1, then you don't need a high win rate in order to win. For example, I always tell people about this experiment. They can do it for yourself at home. You need a coin, and let's say you flip this coin 10 times. Heads, you add 2, and tails, you subtract 1. That's a 2-to-1 risk to reward ratio. And you flip this coin 10 times. And even if 6 times you land tails, so you subtract 1, but 4 times, 4 out of 10, you land heads and you add 2, then you will be profitable. Your win rate is below 50%, but you are in fact profitable because your reward to risk ratio is 2-to-1. That's your risk edge. You need to come up with some rules on how you want to manage your risk. This is just an example with the 2-to-1 RR. The third pillar is your psychological edge. You need to think in probabilities. You need to know that every trade in itself, every coin flip in itself, when you just flip the coin one time, you have a 50% chance of winning. And your edge is basically when you're flipping the coin a lot of times, 10, 20, 30, 40, 50. When you flip the coin 50 times, every flip in itself gives you a 50% chance of winning, but when you flip it 10, 20, 30 times, your edge will play out over time. If you have, for example, a positive RR of 2-to-1. That's how you should think about it. You should think in probabilities.
Yeah, so, yeah, very insightful. I think this will help a lot of traders. And yeah, I thank you very much for your time and for attending the interview. It was really a great conversation, and thank you very much, Martin.
Yeah, thanks for having me, Jonas. It was a pleasure.